Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you very much for coming back for another day of Tesla analysis. I will start with Tesla technical analysis and then I will add Amazon and Shopify to the back half of the video if you guys are interested, and the timestamp is below. If you guys are new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. I am traveling with family today. I forgot my microphone, so once again, I keep running into audio problem, and today it's just straight up forgetting my microphone. So I'm using the laptop microphone, and I apologize if it does not sound as good, but given that a lot of you have been asking for the video, I figured I'd still make the video using the laptop microphone, so hopefully it works out. Here's the daily chart for Tesla. As you can see here with the white line here, Tesla has reclaimed 50 days SMA, currently at $1,004. I do note that Tesla dipped below 50 days SMA once again this past Friday, down to about $983, and immediately bounced back up to reclaim 50 days SMA. Similarly, on Monday, it moved down pretty drastically below the white line here. At the time, it was around 800. At the time, it was around 985 for 50 days SMA, and also quickly reclaimed 50 days SMA. So far, $1,000 or about $1,004 has been serving as a very strong support where Tesla hit and bounced many times. 1, 2, 3, 4, 5, 6, 7, 8 times that Tesla hit the support line, and so far it has not completely lost that support line. So it is positive news for the time being, although I would say that this chart is a very scary looking chart for the bulls. Once again, this is a descending triangle with multiple top. You have one top here, one top here, one top here, arguably another top here. So it could be triple top or quadruple top based on how you look at this, with a very strong support at around $1,000. The volume on Friday was 69%, so this is definitely below average for the last 30 trading days. And I would say that the bounce is pretty significant. However, with the volume here, it wasn't signaling a lot of institutional money moving into Tesla either. The good news is that Tesla holds 50 days SMA, so for the time being, the bulls still have hope, but I would be very cautious. This is the hourly chart. So for the first hour on Friday, Tesla moved down drastically. It never hit the bottom pivot point, and then it started bouncing, moving back up, touching the middle pivot point and start moving sideways. This is just a bounce around 50 days SMA after it has moved away from 50 days SMA a little bit for the last few days here. If you notice that the last bounce based on Monday price action here, you can see that there is a RSI divergence on the hourly chart. So as the stock price was moving sideways the Friday before and down on Monday, RSI start moving back up. That's how we know that the reversal could be imminent, and in fact Tesla had a strong bounce midday on Monday. This hourly chart on Friday doesn't necessarily signal any kind of divergence here on the RSI level here, so I don't really see any kind of major divergence. I did see that Tesla bounce as usual. Once again, the stock struggling to hold 50 days SMA, and so far it still holds 50 days SMA. That's not bad news for the bulls, but the fact that it hasn't really moved past 50 days SMA and hold above it is also cause for concern. So for example, the last 2 days, Tuesday and Wednesday, it moved far above 50 days SMA. The right move after that, assuming Elon Musk did not sell on Thursday, Tesla stock would have gone up further, and that would have been a bullish move and would be a good move. However, with the downward pressure from Thursday and the stock bounced just right around 50 days SMA, I don't necessarily think this is a bullish sign. It's good that it holds on to 50 days SMA, but I would hold off on placing any trade at the moment until we have either a sign of reversal or a sign that Tesla loses 50 days SMA and turn bearish. The trading range for tomorrow is narrower than on Friday. The upper pivot point is $1,030. The middle pivot point coincides with right around 50 days SMA, which is $1,007, and the bottom pivot point is at $968. I wouldn't be surprised if once again Tesla loses 50 days SMA once again and touch near the bottom pivot point here at $968. If it does, then it probably will bounce back up and reclaim closer to 50 days SMA. If you would like, I think it's a good opportunity to play the bounce, but it would be a short-term or a day trade if Tesla ever hit 968 on Monday. Other than that, if you want a swing opportunity, I don't see one just yet. Tuesday and Wednesday set up for a really good long swing opportunity, but it did not work out as expected on Thursday. So for right now, we're sort of on a holding pattern until Tesla flags a different, more bullish or bearish pattern. Taking a look at the weekly chart here, so something very interesting on the weekly chart. I can see that there is a little bit of an RSI divergence on the weekly chart. So as price action moving down for the last 2 weeks, RSI been moving up for the last 2 weeks. So it's not super pronounced on this chart here, but it is a sign of divergence there. I wouldn't be surprised, however, if Tesla continued to move downward another week or two. This candle on the weekly, after all, it is a bearish continuation. So the 2 weeks prior, these are both bearish candle, and this candle this past week here is just simply a bearish continuation. I would not be surprised that Tesla would lose 50 days SMA this coming week, maintain below 50 days SMA, and then fill the gap at $909. Only when Tesla fills the gap at $909 that I feel a little bit better that it would have more room to run back up. Maybe that would be perfect for the run leading into Q4 delivery results, which should be announced right after New Year. So that could be a good run if it could hypothetically get to about 909. So that's where I would potentially enter a call option probably a month or two out at the maximum when Tesla hit 909, and then capitalize on the back half of December where all the traders are waiting for good news from both Giga Berlin and Giga Austin, as well as Q4 delivery result, and then start bidding for the stock to go back up. Back to the daily chart here. Here's my descending triangle. As you can see, the yellow line here, and with the bottom base of the descending triangle is the 50 days SMA. So it holds support for now, but if Tesla consolidate or squeeze right around this area for a few more days, possibly another week or two, without moving too far above or below this range between, I want to say $1,050 and $1,000, then it is bound to fall down further. Conversely, it could also fall down this coming week, which is what I hope, and then start bouncing back up above 50 days SMA. That would be a much better play leading into Q4 delivery result. But for right now, for as long as Tesla can hold on to 50 days SMA, I think we are still temporarily okay. I don't think this is necessarily a bullish move at all. In fact, it is quite bearish, as I mentioned, with the descending triangle, but I think that we cannot predict the next move until Tesla squeezes a little further, getting into the tip of this descending triangle here. So to summarize, Monday, tomorrow, if Tesla falls below 50 days SMA, expect Tesla to probably bounce back up to 50 days SMA or close to it, depending on how far it drops. So going back to the 30-minute chart here, tomorrow the bottom pivot point would be 969, and 50 days SMA would be right around $1,004 or $1,007, give or take, between the middle pivot point and 50 days SMA. If Tesla opens a day with a gap down, loses all of this 50 days SMA and get close to this pivot point, it would be a good opportunity for a short-term, even day trade for it to bounce back up. For me, I am patiently waiting for the day that Tesla fill the gap at 909, which I think it is entirely possible at this point, given the descending triangle. And so if it does get there, then I will take a call option probably right around $1,000 strike price for a couple of months out to capture both the Q4 delivery result date as well as Q4 earnings date. Because I think both of them will be phenomenal and fantastic for Tesla, and a lot of people, especially analysts, will start realizing what a great company Tesla is, and they will start covering Tesla as well as upgrading Tesla. So I expect a bullish move to start in the back half of December and possibly into the end of January. Worst case scenario, they'll start picking that up the week after Tesla announces delivery result, and then start moving the stock all the way back up for the entire month of January and possibly into early February as well. So that's as far as I can see. I still am a long-term investor in Tesla. I think the stock has many more years ahead of growth and much more room to grow, not just $1,243 all-time high here. So I hope that the analysis is helpful to you guys. Let's move on to Amazon. Here's Amazon daily chart. As you can see here, it had a bearish move on Friday, tipped below 50 days SMA, currently at $3,429. So as you can see, this wick here tipped below the white line here, or the white dotted line here, and then start moving back up. So once again, every time the stocks move below a strong support, i.e. 50 days SMA or 200 days SMA, it tends to bounce right back to reclaim it and then decide whether to move back up or completely loses it again. So what I'm looking at Amazon right now, I also see a head and shoulder. This is being the left shoulder, the head and the right shoulder. And I think that Amazon has a potential to lose 50 days SMA once again this coming week and potentially get to 200 days SMA right now at around $3,360. So that is about $84 move to the downside. If Amazon gets back down to 200 days SMA and loses it again, just like it did last Friday and last Monday, there is an opportunity for a call option once again. Since the 50 days SMA and 200 days SMA are kind of close to each other, once it loses 50 days SMA, I expect it to touch 200 days SMA, potentially loses 200 days SMA a little bit, and then start reclaiming back. The volume for Amazon on Friday was 82%, with the predominant volume being a sell volume here on the red bar here. So I do think that Amazon is more bearish than bullish at this point. For this head and shoulder pattern to play out completely, I'd like to see Amazon fall back down to below $3,350. Cross below 200 days SMA once again and start bouncing for a couple of days. So that's how I see the entire pattern play out. So it does have a little bit more room to fall to the downside. So here's the hourly chart for Amazon with the reversal in the last hour on Friday here. It tells me that buyers started to come in for Amazon, but it could not possibly reverse the entire bearish move on Friday. So as you can see that the lowest price point for Friday was about $34.11, and then it reclaimed about $30 back with the last hour bounce here. But I wouldn't say this is a very strong bounce either. The daily candle is still pretty red and bearish with a little bit of a wick at the bottom. Sure enough, when Amazon loses 50 days SMA, which is the white dotted line here, it tends to bounce and then move around 50 days SMA. So on Monday, I think that Amazon has a good chance to touch 200 days SMA, which happens to be very close to the bottom pivot point too. However, if you look at the hourly chart, there is a clear RSI divergence here for Amazon. So if it does bounce on Monday, it could be a very strong bounce. Now, Amazon will be very interesting if it does lose 200. If Amazon loses 50 days SMA on Monday and get to the extreme level, touches 200 days SMA first thing in the morning or very early in the morning within the first half an hour or so, I would say that strong RSI divergence would likely kick in and it would bounce right at 200 days SMA or at this bottom pivot point here at $3,346. The trading range for Amazon on Monday on the upper end is $3,505. The middle pivot point is $3,458. The bottom pivot point, which cover the distance between 50 days SMA and 200 days SMA and some. The bottom pivot point is at $3,347, give or take. So Amazon probably would have room to move to the downside more than the upside based on the pivot points here. But once again, I don't think it will be long lasting, especially if the market is either flat or green. Then I expect Amazon to bounce. The first possible bounce point would be $3,382, which was a previous strong support. The second possible bounce point, if you will, is $3,355, and I do think that Amazon will bounce right around $3,347, which is the bottom pivot point. So that is some food for thought for the bulls or the bear traders. So if you are looking to or already hold a put in Amazon, and if Amazon moved down first thing in the morning, I would take that trade off almost immediately when Amazon opens. Unless the market or futures are completely red. That's a different story. But if futures are either slightly green or just slightly red or flat, I would take my put off almost instantaneously when market open and when Amazon make the first move down. If you are a bull in Amazon options and you want to take a call, I would wait for Amazon to hit close to $3,555 and then take a call option for Amazon to reclaim 50 days SMA at $3,429. If you like my analysis like this and would like more regular analysis or have direct access to me to ask questions, feel free to join my Patreon page. I'll put the link down below. I post regular update there and potential swing trade once in a while if I spot a really good pattern. So feel free to join me there. The last ticker we will look at today is Shopify. So unlike Amazon and Tesla, Shopify did not hold 50 days SMA on Friday. Shopify price action was pretty bearish on Friday. It ended the week at $1,461 with the 50 days SMA at $1,481. So it ended below 50 days SMA by about $20. That is not a good sign for the bulls. I wouldn't be surprised if Shopify fall back down closer to 1,400 even or below on Monday. However, it could also bounce because it is close enough, about $20 close enough to 50 days SMA. It might bounce to 50 days SMA at $1,481 and then fall back down. So based on this chart pattern here, I'd say Shopify has more bad news than good news from a trading standpoint. There is also a gap that it created between Monday and Tuesday of last week. The gap went from $1,432 to $1,474. So effectively, Shopify still have about $30 to go to fill that gap to resume at $1,432, the gap created last Tuesday. So I fully expect Shopify to fill this gap and some. So if anything, the trade to the downside is better than to the upside at this point. If the market is green or futures are green tomorrow and Shopify gaps up, let's say $10 to $20 gap up, let's say it start the day at $1,481, I think that's a good opportunity to take a put option for Shopify to move down and potentially fill this gap. My strike price would be right around $14.61 put option, presumably if there is a gap up. So I will take the opportunity to play the gap, and if I have more capital and can withstand more risk, I could potentially hold that put option for it to fill the gap. But as usual, Shopify reverses really fast, so a gain is a gain if you spot an opportunity, and if you can see Shopify move about $20 to your advantage, I would not wait for Shopify to completely fill this gap. Just fill the daily gap is good enough. So let's take a look at the premium as well. So same week expiration, which is December 17, 1460 put option, which is right at the money now, but in the morning, if it has a $20 gap up as my example, it would not be right at the money, and the premium here would be right around $2,000, give or take. I think $2,000 for a Monday same week expiration is not a bad risk for Shopify. Once again, the only time when I would enter a put option is when Shopify gaps up by at least $15 to $20. If Shopify gaps down, I would wait for Shopify to fill the gap and then play a put option. And when Shopify gaps down, that means that if it ends the day on Friday 1461, it would gap down, say 1455 or 1450 or even below that. I would wait for Shopify to fill that gap and then take a put option for it to go down. If Shopify ever get to 50 days SMA, first thing in the morning on Monday, that will be an excellent opportunity for a put option as well. This is it for this video. I hope you find the information helpful. Thank you very much for paying attention thus far, and until the next video, bye.